Harsha Upadhyaya, CIO Equity at Kotak AMC, joins us on the show right now. Harsha, hi, good morning. Just dissecting what transpired in the market after the state election verdict yesterday. And one is just going through all the brokerage notes today. And there is caution on the street that just maybe the government is going to sing a more populist tune. Their focus is going to get more rural. And we're just debating amongst ourselves, when has the government not had a rural focus in any case? Would you say it's a valid concern? Because Arun Jaitley spoke with us exclusively after the state election verdict yesterday, and he's completely rubbished all opinion. He's saying that the government's focus is to manage fiscal discipline, and that will remain their focus, and they're extremely prudent about that.
Good morning, Aisha. As you rightly mentioned, I think there is a little bit of concern in the market in terms of what could be the policies of the government going forward. But we are in the camp that believes that fiscal slippages are not going to happen. The government seems to be very, very focused in terms of maintaining the fiscal discipline, so that will continue. And as you also said, the focus on rural has been there even today, and that would continue into next few years. That's been the rollout plan of the government anyways. So I do not think that there is going to be any further populism just because of state elections. And I think that event is behind us. And from a market perspective, market will focus more on the next earnings season and some of the policy initiatives from the government, including the budget rollout. I think that's how markets will proceed from here on.
In there, since we're talking about it, let's hear out from Finance Minister Arun Jaitley. He spoke exclusively with us last night, and here's him just completely dismissing all opinion that there is going to be, any populist tone that the government is going to adopt, or any measures which are going to be purely rural focused that they are going to come about with. And he said that the government's narrative is very direct, very clear, that they're going to maintain fiscal prudence going forward as well. Let's listen in.
Well, I think for 2019, first, politically, it means something very important. It means that the string of victories that we've had since 2014 continues. We won both the states which went to the poll. We won both by a reasonable margin. And I think we continue to strengthen as far as the geographical footprints in the country are concerned. And certainly our track record is one where we have given to this country one of the best fiscal disciplines ever in history. And I don't see any reason why we should slip away from that.
Okay, well, you heard from the Finance Minister that all those concerns which variety of brokerages are, flagging off, which is that, okay, government will now suddenly change their whole economic approach. They'll come out with a pro-rural agenda. They will compromise on the fiscal deficit, and the economic agenda would be challenged. He's pretty much rubbishing it. So the concern which some market men had yesterday, and some brokerages and the strategists are flagging off today, I just want to remind them that this is what we got from the Finance Minister yesterday, an assurance that they understand the importance of fiscal deficit and they're really committed to stick to that. So Harsha, the concern which some of the brokerages have raised, I know Aisha has asked you this, how should one now try and connect the dots here? Because the Gujarat election verdict has not been exceptionally strong, and with so many state elections which are around the corner, do you think government will be forced to rethink something on the rural agenda, or it's not going to happen?
See, I think government has already been focusing on the rural side, and they have some of the policies which are looking at doubling farm income, improving rural economy, etc. So those initiatives will definitely continue. At the margin, you may see little more of initiatives on the rural side, which is expected as we enter into an election year. But I don't think fiscal discipline will be broken, and you will start seeing hugely populist measures on that side. As far as overall positioning of portfolios from our side is concerned, we do believe that while when you look at FY18 based valuations, they look on the higher side. But as you roll over into next year, people will start looking at FY19 and beyond. And from that perspective, markets, while they are expensive, they are not overly expensive. So I think That's a good thing. And in coming back to the elections, I think the Gujarat victory gives them to gives the headroom for BJP to go ahead with some of the other policy reforms in continuation with what they've done in the last 3-4 years. And also progressively they will get a better majority in Rajya Sabha, which should also ease some of the policy initiatives in terms of rollout. So these are some of the positives that we see from Gujarat election results as of now.
So how is it, Harsha, that one should approach the market right now? I mean, politics aside, because even 2018 is going to be extremely crucial. You've got 13 state elections before the big one, in 2019, the general election. What about the macroeconomics right now? Because the texture and outline of that as well is changing, with crude getting back to 65, which about a year and a half back when GST and Demon were announced, that was not quite the case. So where do you think markets should lay its focus on?
Clearly, some of the macro benefits that we saw over the last 2-3 years seems to be reducing in terms of momentum. That doesn't mean that macro is going to reverse anytime soon, but I think some of the benefits have already been priced into our economy, our markets already. So going forward for portfolio decisions, it will be more on a bottom-up micro basis in terms of which are the sectors and stocks that are likely to do better in terms of earnings growth going forward. And if you are comfortable with the valuations there, then you should go ahead and build your portfolio into some of those sectors and stocks. So I do not think that it's going to be a macro story and a revival in macro for us. It's already in place, and at the margin, there is some worsening of that macro. But at the same time, we are going to see operating leverage kicking in for manufacturing companies. We have also seen employee costs as a percentage of turnover for top 2000 companies which are listed, which has shot up from about 8% of turnover to about, on an average, 11.5% of turnover in the last decade or so. So that's likely to reverse at some point of time. So both operating leverage as well as benefits that we see in terms of using employee force more effectively will lead to higher profitability in Indian companies, and that's what we are betting on. We have seen a bit of that in the September quarter, where for the first time after several quarters we saw double-digit earnings growth on a year-on-year basis, and also there was a sequential improvement in terms of earnings numbers, and we believe that that trend will continue into December and March quarter and even into the next financial year, and that's what will keep the markets on a stronger footing.
Harsha, what to your mind could be the big outperforming theme for 2018? For 2017, hands down, it's been metals and it's been NBFC. Do you think the same momentum will roll over, or new group of sectors will join in? Because when the earnings recovery will get more visible, maybe markets will start shifting their preferences and the goalpost.
We believe that two investment themes are looking attractive. One is all infrastructure related stories will start seeing some visibility. We have already seen improved order flows. As we head into 2018 and beyond, we will start seeing improved visibility in terms of execution of those orders, which will definitely improve their financials both from a top line and a bottom line perspective. So anything that is linked to infrastructure is worth looking at. And similarly, given that the government will continue to focus its energy on reviving rural economy and improving agriculture, so that's another theme which will show a lot of gains during the next few years. So anything that is linked to rural economy, whether it is consumer discretionary, which is rural dependent, or any of the agri stocks, including fertilizers, irrigation stocks, pipe manufacturers, etc. So all these players are likely to see reasonably strong demand coming in over the next few years. So these are the two themes that we believe will continue to make money for investors.
On the anvil, Harsha, while there are giants like HDFC Bank, which is one of your largest holdings in the fund, is going for this fundraising activity, quantum unknown, but of course, it's bound to lead to dilution as large as maybe who knows, about 5 to 6 odd %, assuming that they are looking at a joint raising of about almost $3 to $5 billion. But this is also going to up the book value for HDFC Bank. Besides that, there is also the first tranche of the PSB recap, which is also slated to be announced in the month of January. How is it that you're approaching a segment as critical as banking at this juncture? Would you stick with the private lot, the cream, which have been the performers, or are you willing to take that bet and shift towards PSBs now?
As far as financials are concerned, one needs to see whether the capital raising is for growth purposes or for repairing balance sheet. I think that's the clear differentiation one will have to make. As far as some of the private banks are concerned, clearly they have been growing at much higher rate than the economy, as well as higher rate than the overall banking sector. So they would obviously need growth capital, and that's what they seem to be raising at this point of time. And in the past, we have seen a very, very efficient use of capital by some of these banks, and we have no reason to believe that that's likely to change. So we continue to remain positive on that lot. As far as public sector banks are concerned, yes, the immediate threat of balance sheets weakening further may have got arrested with infusion of funds and expected infusion further in terms of recapitalization. But at the same time, the growth trajectory is not as strong as what you would see for some of the private sector banks. So at the moment, we have seen some improvement in valuations that the market has ascribed to because of the immediate resolution of some of the immediate concerns. Going forward, we would look forward to see a clear growth trajectory, at least for some of the larger PSU banks. If that were to happen, then maybe we will increase our weightage into some of those PSU banks. But until then, our focus will still remain on some of the private sector banks and financials, where the growth rates are much higher than the rest of the pack.
Surprised to see that a sector like realty, we all know that it's been in the dumps as of now, while there are those green shoots which are emerging, although just very region specific, but the sector has been a big mover all of 2017, and you continue to call it in a void. Why is that?
See, if you look at the physical real estate market, we have not really seen any improvement, whether it in terms of demand or in terms of pricing. What some of the market participants have bet on is clearly the fact that just like what you have seen in many other sectors where unorganized players have got marginalized due to various measures such as GST, demonetization, etc. With RERA coming in, with a slew of other measures that the government has taken, the market share of organized players in the real estate market will also start inching up going forward. So that's the bet most of the market participants have taken. While we do believe that that's likely to happen, but we tend to believe that the prices have already discounted most of this upside, and immediately we don't see such a turnaround happening in the overall real estate space. So we are remaining cautious on that basket.
Harsha, IT, while that continues to be an eyesore, do you believe that come next year as well, and we're going to see IT remain as a pressure point? Because the indications from some of the managements, be it a Tech M or for that matter TCS or even smaller ones like a Persistent, is that the deal pipeline is now beginning to look up. There is some resurrection in the BFSI vertical, and the pipeline is looking actually strong. But you continue to believe that this is a sector one can avoid?
I think one needs to be stock specific in IT sector. I don't think sector as a whole is likely to outperform the overall market. But there could be players who will see better growth rates compared to their history, immediate history, or compared to even market at some level. So those will be the stocks that one needs to buy into. But overall, I think the headwinds still continue, the cost pressures are still there, and rupee is more or less stable and is expected to remain stable, which means that the tailwind that they used to enjoy because of rupee depreciation is unlikely to be there. So given all this and the fact that some of the domestic focused themes are likely to perform much better than the IT sector, it's prudent to remain underweight on the sector as a whole, but we may look at some of the stock specific stories there.
Okay, Harsha, great speaking with you, and in case we don't meet again in 2017, here's wishing you a very happy new year to you and your entire team from all of us.